morning.
Hey, hey,
How are you?
not bad.
Good.
Happy options expiration.
Yes, it is.
Welcome, everybody. Glad to have you here. We're going to jump in one of our live profiling Q&A sessions. And it's really, we take some time out most Fridays just to take a look at markets, often just to help, there are a lot of traders coming to the profile as a new way to look at markets. And this is a way for you to either, get some insight, ask some questions. Doesn't often happen, but if there's a trade that develops, we can walk through a trade, and then that's just part of Fridays, right? Especially given the types of traders that we are, we're not particularly looking at scalping, but more intraday swing stuff. Always want to be mindful of the risk within markets, and that when we come to markets, we are fundamentalists, fundamentally behaviorists, meaning that we're just looking for how price is behaving, and we're using the profile to help us see that. Not necessarily fundamentalists looking at balance sheets or looking at technical indicators, but more looking at price and volume. Real quick introductions. If you don't know, I'm Josh. I'm the founder of Trade with Profile. I came to Profile in 2012, so I've been practicing with it for about 7 years now. That was a key component that helped me move from being a full-time retail trader to being a full-time institutional trader. And along with me is JP. Between the two of us, we've got a fair bit of experience. we've made enough mistakes to know what not to do, and we're very much process oriented in our approach, because ultimately getting to the I Ching, as it is in trading, is consistent profitability. Can I come to the market every day with an idea? Can I come to the market with edge? Can I come to the market with a way to manage risk? And you can always kind of sift the people who have been in markets and have been through it and still emerging, still showing consistency. The things that they talk about, they talk about process, they talk about risk, they talk about the things that we have control over, because we know, having lived through a number of market cycles, there's so much we can't control. Our process and our whole reason for being is just to help develop consistently profitable traders, and helping people understand how to use the tool through a development pathway so that they can have consistent skill and consistency. So often when someone says I'm not confident yet, someone says I don't have an idea when I come to the market every day, there's all kinds of risk to that market participant. It's our job to help get you to that level of consistency, being able to come to the market every day and have an idea. You don't have to have somebody hand holding you. And we do that through our pathway. We focus traders on 3 key areas, and you're welcome to spend time looking at these 3 every day as part of your own process. But what the 4 behaviors observable in every auction and how to observe them, they're really just 4. And we can further consolidate them down to 2. That an auction is either consolidating or trending. We use the term balancing, it's imbalance. Distributing or developing are another ways to talk about that. But there's a beginning, there's a directional move, there's rest, that's the balance part, and then there's a test or another directional move. We can look at some examples of that today. There's 4 questions to ask before entering a trade. If you want to make your trading more consistent tomorrow, every time you put on a trade, walk through these 4 questions. What is the opportunity? So like, what am I? And I'm actually in a trade right now. We're going to talk through what I'm in and why I'm looking at it. What's the opportunity? What am I willing to risk for that opportunity? Does that make sense? What would tell me that I'm right? Behaviorally, what should I see, and what would tell me that I'm wrong? And then finally, 4 stages of auction competency and how to know which one you're in. So as a developing professional, as you're coming to this, and I encourage you, whether you intend to use trading as something that you do day in and day out, or whether it's something that is a side hustle, it will absolutely run you over if you don't come to it with process and with diligence. This is not a lazy man's game. This is a game that you come with great intention and focus, but knowing where you are in your stages of auction competency, so you don't outsize yourself. Are you at stage 1 where You don't know what you don't know. Are you at a stage 2 where you know that there's things that you don't know? Are you to stage 3 where there's things that you know but they're not instinctive, or to a stage 4 where you've done the process so much that you can operate from almost instinct, but it's still very process driven? We help traders think through that and develop that every day, day in and day out, through something we call our trade plan, which takes our development pathway and puts that into action. And we'll even look at some examples of what that trade plan looks like this morning. But we've got some submitted questions and some products that I know that are of interest that we should take a look at, and glad to have everybody here. If you have a specific question that you want us to address, feel free to put that in the chat or in the Q&A box here in this Zoom platform, and we'll cover as many of them as we can, and go from there. And so with that, let's jump over here. I want to look at crude oil, and I know that there were a number of traders wanting to look at crude oil today, and oh wait, that's gold. Not, we'll talk about gold too, but we're looking at crude oil. And I want to pull up kind of my plan for crude. So everything we do starts with a review of the prior day and what we're trying to do. And let me try to blow this up. Can everybody read this? My little, there we go.
Looks pretty good.
Looks pretty good.
Mm-hmm.
So 2 questions we ask about any auction before we come to try to trade it is where is the auction attempting to go? So when you're doing your review every day, when the auction closes, you look at that, you're like, hey, what auction is it attempting to go? Is it trying to go higher? Is it trying to go lower? Is it going sideways? Crude has been in balance. It's a balancing market. We've actually been in a trade for a while, an options trade, based on the idea that just turn off some of these other intraday, based on the idea that we're going to trade sideways. We had a long move off of the, really ended up being no big deal Iran stuff, and now we've been basically trading a bracket. You can see just the build out in this volume profile on the right. It's a multi-day composite, but we've been in this bracket. And so when you're in a balancing market like this, where there's overlap from one day to the next, we're looking for just kind of rotational trade within that, and looking for references to play at. The key reference was really this 58.30 was the key reference today. Yesterday we attempted higher above that. We actually closed above that key reference. And so today, while there's really still no directional attempt higher, so overall, the auction is attempting, where's my, here it is, back over here. Auction is in balance basically, and it's in balance with and very near the most traded price of the last 5 days, which is the 58.30, but quite a bit below the most traded price of the last month at 60.87. So we're just really kind of watching how we trade around that 58.30. If we open above it, does it support us from the downside? If we open below it, can we get back above it, and where do we go? So we had a couple different scenarios, but coming in, this was last night. So 58.30 was a downside reference, and expecting a trade between 59.44 and 58.30 on Friday. High today was at 59 and change, but you can see our downside reference has been that 58.30. We're coming to it late. A couple different scenarios that we were looking to play was we had 58.70, which is the most traded price from yesterday, right here. If we open inside of range, which we did, we're looking to see how we touch that level. and how do we act? Because that could have been the mojo to get us up toward the 59.40 area. In fact, didn't, and we accepted below that, and so then that set the stage for a move to 59.30, 58.30, and that was really the move, basically from 58.70 down to 58.30. Now, looking for a potential responsive trade back off of this level, as you know, this is a key multi-session level, should hold the auction. It's thus far holding it. I'd actually like to see him kind of push below it and fail and get back above it. Then we can make a run with some size back up here to 58.55. But overall, just kind of like how good of a job is the auction doing it? I mean, yesterday didn't have a directional open per se. It did have a fairly directional day, and value was higher, but again, we're still in this balancing range. And so when that's the case, there's not a lot of directional conviction. It's not like I'm looking for some big, massive breakout trade. I'm really looking for rotational trade and fade from the edges, and that's really been it's the right tool here. That has been the play for the day. So now let's just talk about some ways to get in this, and even late in the day, how we were anticipating a final move to that 58.30. So we've got a couple profiles here. So we've got the classic market profile graphic here, and then this is a volume profile. Okay, and the volume profile, all that's showing me is it's showing the accumulation of volume at a specific price. When an auction, when you have what's called a complete auction, you're going to find most, like a normal distribution, you're going to find most of the volume in the middle, and then you're going to see like what it's doing right now, where it's tapering at the bottom. You can see earlier it couldn't facilitate trade higher. They were tapering in that way. We still had a good clue that we were going to get that push lower late in the day, because until we got into F and I mean really in J period, I and J period here late in the day, we were still pretty skewed and imbalanced to the downside, and so they pushed to rectify that situation, which is one thing to kind of watch as you're using this. Is it developing some kind of skew that's incomplete yet? And then what's cool about this is this happens on all time frames. So whether you want to look at this is now looking at a 30-minute basis. Similar situation. So we opened early, tested into new ranges, got back through the open. So that was an early clue that we were going to struggle to get higher. They got and basically closed back at that 58.70 level, made new lows in B period. So now I'm very much interested in looking for opportunities to be short. At the time, however, the most traded price was here at 58.70, and so just as a general rule, you want to try to position yourself at or above value or the most traded price of the session if you want to be short. And then you can see the spike attempt higher, and it stops. Now, what's interesting is where it stops. It stopped right here where we had a number of like some pretty significant volume. So what I want to do now is I want to look at a 5-minute inside that at a shorter time frame to see what the picture looked like. Come on, baby. I've been asking it to do a lot of work today. Turn on.
It's tired.
It's tired. It's been
It
a
was
long
week. Yeah.
Oh, come on. Oh, I know why it's not. It's because I'm on an annotation tool, not a. I was just on the wrong tool. It wasn't the platform. It was me.
Oops.
Whoops. All right. So I got into C period and moved higher. Now that's back above that 58.70 level, right? So that could we could still come back and take out the high and move higher. So that you have to look at that as a potential. But it got into this area of volume here and rejected off with initially some negative order flow. That's what this number is. That's telling me the difference between buyers and sellers. But what was really interesting is that the second 5-minute was stronger. So not only did they reject off that volume, but the next 5-minute had a stronger delta. So that was an opportunity once we got back to this 5870 to be short and initially use the high of the day as risk, looking for a move to this 5830. And then we got pretty close to it in not too short of order. Some poor lows that then closed up down here, but completed the job most recently. And so now we're kind of trading around this longer term level. And one of the tricks around profiling is thinking in terms of cascading time frames. So lots of traders want to look at like 5 minutes, and some guys even look at like 1-minute charts and stuff like that. But knowing where you are in terms of value references across multiple time frames. So the general rule, the really, really simple rule is know where value is and position yourself favorably according to that. So if value is higher and you want to sell it, you want to be at higher prices. If value is below you and you want to buy it, you want to get lower prices so that you can get better trade location. Where the nuance is across, when you're starting to use multiple time frames of, here we were both above value for multiple time frames, and then we were at the time. So see up here was value for the day. So when we're selling right in here, we're above value, which gives you good trade location, and then defending. And then you can see as the day went on, and the yellow line is where value is, that we've accepted and migrated that lower, just to show that the auction is accepting lower value, and is continuing to do that throughout the session. So the short is now done because we achieved the target. The opportunity that I'm looking for now is I'm looking for a late responsive opportunity, we call them, in a rotation back toward. So I want to see somebody attempt lower below this level and get trapped. We had a really strong selling right here that got us to the target. We've not been able to get lower prices yet. So that tells me we're starting to get tired to the downside. If we can't get another strong push below, but actually I'd love another strong push below this level that can't get any follow through, and that would give us a good opportunity to defend the low and look for a rotation back up to the most traded price for the day at 58.53. And I'll look for this trade out. One of the things that we've been talking about with our community this week is timing and different periods of, you look for certain activity at certain times of the day. I'm only looking for this trade. Crude's going to close here, in the next 40 minutes or so. I only want to look for this trade in the next, 30 minutes. I don't want to take this all the way in the close. So if it doesn't happen in the next 30 minutes, I won't go there.
And that probably won't happen.
And yeah, it's OPEX today, so I don't have high expectations, but I am interested. I think there is opportunity, specifically, using those 4 questions. So, what's the opportunity is that I'm noticing it as the auction is moving lower, we're not facilitating more trade down there, and we're running out of time to do that, really. So, either we close on the lows below this key level, which that could happen, or they push below it and reject back above it, and I can establish small risk with and I'm basing that off of the opportunity. The opportunity is a rotation back to this bulk of volume. So I'm going to try to get my risk as tight as possible, heading back toward that level.
And Josh says something very important is time. Do you have enough time? And what we mean by that is, do you have enough time to let this play out and act correctly? And since we're up against a holiday, Monday's a holiday for trade, so a lot of the desks are already they're already leaving, they're turning algorithms off. So chances are it could happen. It'd be outside chance, and you'll always hear us talk here about risk, and risk also means when are good times to trade and when are bad times to trade. I you know Everybody's different, but Friday after 12 noon on East Coast time, I've never found very many good trades.
Yeah.
So
Yeah.
maybe not a good time to
That's
trade.
right. Yeah. So every once in a while we find something here, but typically we're trying to wrap stuff down. It's kind of it's kind of like
Yeah.
I tell my kids, like nothing good happens after 11 p.m. You know,
Amen.
like
Yeah.
nothing good as a trader on Fridays typically happens after 11 or 1 p.m. Eastern, unless we get like one of those days in the equities where we just drift, and you're with the drift, and they're going to drift in the close. Then that's great. You can just trail it um, the rest of the day. But hey, so Radoslav, I see your question. So the question is, which open types do you track, and what relation to the daily auction they have? So this is a great question. So I'm just going to write this down. So uh,
Man, we could spend a couple hours on that one.
yeah. So
Great question.
so this is tied to a principle that we encourage those in our development community to think about, and also for yourself as well. So how an auction begins, and we're auction theorists. I mean, we're using auction theory. That's why value is a term that's used, right? So if I know that I win in an auction, I have good location relative to value. I'm positioning myself relative to value. If I buy, for example, if I buy above value, why would I buy above value? I buy above value because I believe that where value is going to shift. It's going to shift higher, so then I've got good location. Otherwise, you would never buy above value. You'd always wait to buy, either at or below value, unless you believe there was going to be a shift, and that does happen. But how an auction begins is often correlated to how it ends. And this is true in terms of, like, think of any type of thing that's auctioned, whether it's a cattle auction, an art auction, eBay. Like when there is rapid activity of price discovery early in the auction, it can sustain that fairly for quite some time. When there's not a lot of interest early on, that can also mute what happens later in the day. And so we track and follow some of the typical, but there are about 5 open types that show up that you can identify. Now, they're not necessarily textbook examples, but there's structural similarities where you can go, oh yeah, that's this type of auction or open type. And then there are 7 day types that are correlated to those. And we find that some of those are more directionally strong than others and lead to more impulsive behavior. So today, I would say that just to go turn off this 5 minutes here again. So for example, this open type in the NQ, so the open, move above, and then come back in. Now, some might say that's called an open test drive, except we didn't really drive lower in A period. So there's overlap between A and B period inside of the prior day range. Not as much overlap as I'd want to see, so we would call that an open auction in range. That means that there's just not a lot of directional conviction, and most likely you're going to see rotations the rest of the day. This is essentially a normal day. We've had higher highs and higher lows, and lower highs. About in terms of extension of the range, I mean, that's also why I'm favoring. Oh yeah, here's our pop. Yeah, nice. Oh yeah, go. It's why I'm favoring a rotation, is because I'm not in a trending environment. I'm not in a trending situation here. I'm in a rotational environment. So that means the people that are on the outside are going to get, well, like what's happening right now. they're getting rotated a little bit. But if, as a contrast to that, like if we look at the NASDAQ, okay, this very much was an open test drive, lower open, very big range in the A period. And B period wasn't able to take much back from that. It could also be kind of a hybrid where you could say it was an open auction outside of range, um, because there's A and B overlap outside of the prior day's range. But the width of this A period and the velocity, you can just see from the volume, is more of a driving. And so, we expected some extension, not as much as we would have liked to have seen. We would have liked to have seen movement all the way back down towards like 9105. So, even though you have a driving open, normal normal behavior here as well. And most days are normal days. Most days do get rotations. Um, we distinguish between a normal day and a normal variation day. So a normal variation day is where you have significant extension outside of the initial balance. What I mean by significant extension is, um, you can go back and run stats on your first hour's range. Okay, and so 50% of the width of that first hour gets you to like 9120. 2 times that, so if we double that range, that would get you to 9099. If you get out past 1.5 to 2x, then it's a very directional day. You're getting a lot of acceptance outside of that initial opening range. When most of your trade is inside of that, or inside of 1.5, then it's most often a normal day. Almost back to 50, and they popped that sucker.
Yeah, they did, surprisingly. Liquidating before.
Yeah,
It could be just a liquidation event coming into the end.
they just could not. They couldn't make new lows right into that zone.
Yeah, it's a good zone.
Yeah.
Delta's pretty weak though coming up. I mean, first candle's good.
Yep. Almost there.
I'm not in this, by the way. I'm done for the day.
I'm small by buy stop, but I'm not full. I really wanted to see him push to 18, but I'll
Yeah,
take this. I'll take it. It's
yeah,
fine.
this is nice. So that this, just to understand something, what you're observing here is everybody trades different. Josh will trade this a little later in the day on a Friday. I will not. I cut myself off at 12 noon Eastern Standard Time. And that's just because of me. That's the way I do things, and that's a structure that I put in place for me to make sure that I don't do something silly on a Friday. And I think about it, and I don't want to ruin my weekend. It's been a good week, so let's just call it a day. I don't think there's going to be a lot for me to do. This is a nice end of the day pop here. Um, if Josh can pick up dinner tab tonight, then albeit.
Yeah. Well, and if we trade back through, I'll just show you where my stop is, gang. Because this is an often question. So my stop is 1 tick below. So 37 stops at the moment.
Nice. And while we're watching this and see if Josh makes a ton of money, anybody else have any other questions? Market structure. It's been a tough week, tough couple weeks. Let's begin with that a little
Yeah.
bit too. We've had a lot of news out with China and the trade deal. There's still some uncertainties around that. We have an impeachment trial going on, and we're rallying like a madman right now. It's crazy. The Russell is starting to catch up with all the other indexes and trying to take out its all-time highs. The other indexes are just, it's almost a gap up every day. They do get a little bit of selling, and then they just buy it right back up. I mean, today is a prime example of it. Matter of fact, I was just looking. Hang on a second here. Yeah, and I'm guessing, and again, it's just a guess, so please don't go trading something like this, guys. We're 1 point below the IB on ES. The IB's been tested 1, 2, 3, 4, 5 times on a 30-minute basis. What's the chance of that one getting taken out into the close today? However, the NASDAQ is not participating in its IB highs. the Russell is below the IB low and looking to want to make new lows on the day. So go figure, right? So it's a broken day today. It's it is hard trade right now because we are gapping up and we don't have a lot of two-way trade. So if you're an intraday trader, it's plug your nose and buy any type of dip, which is extremely hard to do, especially at these levels.
Yeah.
Otherwise, sit on your hands and wait for better days to trade. So.
Yeah. Yeah, I mean, this is a case point. I mean, just having this ES chart up here. So if you're going to be long, so value, even just for the last 3 days, if I go out longer, you can see this big volume node here at 3283. That's been a big downside reference this week. So yeah, I'll cover that here in just a second, Stephen. So we're trading above value for the recent auction. So the only reason that you would be long here is if you believe that this picture of value is going to change. Now, they are, if you notice, they are building out volume here at 3324. They build enough of that, and then that will become the more significant node that then can, say, hey, as long as we hold this 3325, I'm basically buying at value and looking for pushes higher. Buy at value, sell above value. Again, depending on your time frame. But it's definitely a tough spot. And what we saw this morning in the Nasdaq. So we did take a trade this morning early, heading back toward yesterday's range, and part of that was because we were way above value. When I looked at the composite, I mean the biggest level down there in the composite was 90.66. Now you can see we're building out here around 91.50. But that didn't exist this morning. I mean, this this thing looked like it just looked like that.
It was unbelievable.
So that means you're running out of participants as you're going higher. So what's an auction got to do? It's got to go lower to find participants, to find buyers, right? And so that's what they did.
I'm always amazed at the. Okay, so let's just start here. I'm sorry, I gotta clarify this. To make a market move, there's got to be a lot of buyers, right? And there's got to be a lot of volume pumping into those markets to lift them, right? And I am just thoroughly still, even after as many years as I've been trading, I'm always still amazed at how they pump these things higher and higher and higher. We were just talking about that this morning. I look at some of these stocks and I'm just amazed at any type of move back. I mean, just a fractional move back, and man, they're buying those things, man, left and right. It's just crazy. So what do? How do you trade that? Well, like I said, if you're not on board, you don't chase it. If you've never heard my dog on the gravel road story, I'll share it with you sometime. But you don't chase it. You have to be patient in these types of markets. You have to wait for something to set up for you to give you the risk reward, just like what Josh just showed right here, an opportunity in crude. Okay. And that's another option is you may need to look at a different market that's not correlated to the S&P or any of the indexes or anything like that, or the general market indexes, right? Because then or like the grains or the energies or something like that, because you do have you don't obviously crude's been dropping like a rock now recently. So but this is a good opportunity that Josh just took. I mean, I know you're going to look at this because you got to answer a question. But one thing, do you mind pulling up a bond chart for me?
Sure.
Here's why I think, and again, I'm not a predictor. You're not going to find me saying, "Oh, we're topping out up here," because this thing can keep going for a long time. And you got to resign yourself to the fact that this market can continue going higher and higher and higher. Okay. Now these bonds over the last how many? Hold on a second. Let me get the wrong chart up. Bonds now for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks have been going sideways. 9 weeks are going sideways while the equities have been rallying like madmen. Okay, so I call this broken because typically there's an inverse relationship here and it's not a one-to-one. Okay, when the equities go up, the bonds go down. But typically there is some type of inverse. Okay, because you have to think about money flows in the world of money flows in the equities, it flows out of bonds. You know, it's money's always seeking yield or alpha. Okay, and to do that, they have to flow in and out of different things. And so they flow into equities, they flow out of bonds, or they flow in the bonds, they flow out of equities. Okay, just a simple balance. Well, we've been going sideways now for those amount of weeks, and you would think with this kind of rally they'd be taking all the money out of bonds and notes and stuff like that and pushing them into these equities, and they're not. So what we always talk about in the Slack channel is, okay, we sort of got to, you know, who's lying, who's playing liar's poker here. All right, now we're not going to trade off that, but we keep an eye on it because sometimes it's a clue. Just like the Russell, we watched the Russell all last year. Equities, you know, equities, or excuse me, the indexes were just racing, making all-time new highs last year. And then all of a sudden, we're like, hang on, this look at that market in 2019 for the RTY that Josh has pulled up. That thing went sideways the whole year. Why everything was going up. And what we said is if they do break this thing higher, that will add fuel to the other indexes, and we will take off. And that's exactly what has happened. And now it looks like the Russell is knocking on the door at those highs, and those highs are 1742, I think it is.
Mm-hmm.
Is that right? I just wrote it down because I was writing the weekly note.
Yeah, real close.
Yeah, 1746. Yeah, 1746. So so we're creeping up on them. What are we how far are we away from that? I can tell you just a second.
So we're 1703 at the moment.
Yeah, 1703. So we're creeping up, right? So just it's always good sometimes to look at those things and just keep an eye on them. I always get this suspicion. That's why it's hard for me personally to buy any of these small dips. And these aren't even dips. These are blips on the radar screen, right? And
Right.
if you want to know if they're dips or not, go, Josh, do you have just a bar chart? Go bring a bar chart up of the ES real quick. And then go to a weekly chart. All right, so we don't have a EMA up there, do we? Okay, so if we had a simple 8 EMA on this thing, we'd be so far away from the 8 EMA. So that little blip this morning on the radar screen doesn't even show up on the weekly chart. So this is a massively strong market right now. And so there's just not enough pullback in this market to be able to say, hey, listen, you know, this is a buyable opportunity right here. And everything has to be quick, and anything on the short side is what we talked about in our channel is short-lived, and you can't hang on to it because it will just expect to get ran back over. So did we just take out those highs?
Not yet.
Okay.
There's, I mean, here's your 8 EMA on the weekly is at 3221.
Whoops, I just lost you. Yeah, so we're just a little bit away from it.
Yeah.
So, and you think, well, it's got to come back to the 8 EMA. Well, no, it does not. Okay, it can gap up next week and keep going.
Yeah.
Right. So don't get stuck on that, but just recognize you have to look at higher time frames sometimes to realize what a pullback is. Because again, on an intraday basis, guys, you get so focused in on, okay, what's my 30-minute doing? What's my 60-minute doing, that you lose track of what really is happening. And so you gotta, we would love for this market to pull back so we could actually establish and get a little bit long, but it's been tough, man.
Yep.
These are my least favorite times to trade, actually. So
yeah, and if you like two-sided trade, I mean, equities is not the place to be.
Not right now. It's not. No.
I mean, yeah, it's rare. It's there still seasons of it, but I mean, there's still opportunities. Like, and we've even talked about you can be a short, and some people like the short just because the short is typically faster. You know, the momentum, the price action is typically 3 times the downside as it is to the upside. you just can't, in the equities, you can't be a convicted short. You need to take your stuff and go. And that's kind of what we did today. I mean, we saw the opportunity, excuse me, to traverse these singles that were left in impulsive activity yesterday, down to this 9105. Like that was the ultimate target that we were looking for, and very reasonable that we could get there. Whoever these buyers were that created this spike defended. And when we got back inside of the opening range after that push lower that couldn't get any follow through, that was a clue to cover the shorts. Now, let's say you're looking at a market like this, and the question would be like, where's a potential opportunity? Now, I'm not going to do this because it's Friday, but let's say that this was a Thursday. Okay, a couple things that I would look at here. So you can see we have a very, very pronounced and balanced intraday profile, right? We've got most traded price here is 91.55. We do have let's see, are we about average opening range. Like it's not super wide, it's not super narrow, it's pretty good. There's only about a 30% chance that we would take out the high yet today. Could still happen, but only about 30% chance. So where's a potential opportunity yet today? If, again, I'm not going to take this, but if it wasn't Friday, if we trade up here to the open should hold the price. And if it does, that would tell me that there aren't like big traders really looking to squeeze this. It's more day time frame traders, and that could be an opportunity to get reshort with risk above the high of the day, back for rotations back to 91.55. So when you have a rotational market, best trade location is on the edges.
Absolutely.
And that's what the profile can really help you do, is get good location. Like where we're at right now, we're in the middle of the muddle.
Yeah.
It could go any direction. You're smack dab in the middle. So your risk is really high here. If I get out here and we can't build this profile out at all, if it stays thin like this, then that means that everybody who's getting long up here is getting long with poor trade location. And if they can't get excursion past the, this to run us up towards like 92 into the close, which they've been doing that kind of stuff, right? But if not, if I find sellers stepping in, defending up here, then that's a cool opportunity to rotate back, and that has good expectancy.
Yeah, check out that ES chart. They're knocking on that door again. Now, I find interesting about the ES here is that, for one, it's Friday. I would never take this. If it was a Thursday, I still wouldn't take this trade as an IB trade breakout, because the IB breakout is one of my trades. And the reason is because we have like a negative 20,000 delta on this thing today. It's crazy. I mean,
absorbing a lot of sellers. And
that's
what
crazy.
JP's talking about here is this number down here. So these numbers are the contracts traded at each price. This number below is actually the difference between trades placed on the bid versus the ask. And so when they're on this platform, when it's more hit the bid, you get a positive number. So we're about 21,000 to the sell side, where they've been hitting the bids. It's almost like as we're going to these higher prices, they're just selling.
And why the RTY is getting ready to take out its lows right now.
Yeah.
That's crazy.
So I would not be surprised to come in, Monday and see some liquidation based off the selling taking place today.
Tuesday.
On Tuesday, that's right.
Tuesday.
Yeah, so I mean, here's a tip. you want a tip?
Don't trade Monday. That's the tip.
well, that's the tip. The other tip is that if we drift higher on Monday, Tuesday, I would be looking heavily at a quick open liquidation.
Mm-hmm.
I will salivate if we drift higher over Sunday night into Monday, and we come in Tuesday and we're above this 33.24. Like say we're trading like 20 points, 30 points higher. Oh my gosh, I would salivate at that.
And I'll like today. I always say it's all my money was made on the short side today. I had no long trades today.
Yep.
So,
Steven, let me talk about my trigger here, buddy. So, there's all kinds of different ways to trigger into a trade, and part of building out your playbook as a trader is to, find conditionally how you want to potentially trigger into a trade, and especially if you're trying to keep the risk tight. So sometimes we want to see, like a pop in the direction we want to go, and we want to see that hold, and then we want to get in. Other times where we're perceiving the potential for traders to get trapped away from value, you can do stuff like have partials. And in this case, I had some buy stops that I was kind of trailing down, kind of expecting that they would pop. So what I saw this, for example, this 5 minute here was the strongest selling delta of that 30-minute period. And I just put a buy stop above the prior 30-minute, because these were all selling right here. And so I was like, if we come back above that, that trapped these buyers or these sellers, and we could move in a good direction pretty quick. And that's what this did. This just boom got me in, and that's why I'm now defending these buyers. The other thing, this is where order flow really helps on your entries around this stuff, is whoa, well, looks like we're, come on, get up there to the target. Probably gonna run me. Is that this is the strongest number we've had here for the last hour. So that's a great place to defend. And if they run the base of that, then I want to be out, which it looks like they're going to do. But so far in that trade, I've had about a half hour of positive expectancy in the trade with very little risk.
And again, another thing that Josh says, it's just extremely important. If you want to have a long-term career in trading, which it's very possible, you have to, you got to switch. Okay, you have to switch a couple bad habits that you may have. I'm hoping you don't have them, but most everybody does. And Josh and I both had them, and we probably had more than everybody else, but we were able to work through them. You still have to work on things. It's not like, hey, I've arrived, I'll never do it again. That's not true. Okay, we're human, so we still do stupid things. So the other thing is this, guys, and this was one of the things that really turned me into a really profitable trader. When you realize that I'm risking more than what I'm making, okay, um, things change. You understand that. So let me give you an example and ask yourself if you're this person. So you get a trade on, maybe you're 1 or 2 lot trader or something like that. If you're larger, great, doesn't matter. And you get a couple points in your favor. It doesn't matter if it's ES, NASDAQ, or whatever the case is, you take profit. Okay, but you had a stop that was 7, 8 points away. Well, I don't care if you win 9 times out of 10, you're not going to make money, because on the 10th time, it's taking you out and you've just lost everything you just made.
Yep.
You have to switch that around to where your stops, looks like you're going to get a little on this, Josh, where your stops are much less. So what does that mean? That means sometimes that's why your probability, that you're going to get a good pop here. What time is it? Oh, you're running into the bottom of the hour, so they're going to liquidate. So when you guys, I got to say, write this down, go learn it, burn it into your brain, because this right here will turn you into a profitable trader if you learn how to do it. Is identifying that risk and making sure that you are going to have that risk to the point where your reward is much larger than that risk. I know it sounds simple. Oh, well, yeah, everybody says that, JP. Yeah, you're right, they do, but they're absolute. About how many people do it?
Right.
It's always the other guys. Well, I took 3 points on this one, and then I got ran. We just had a guy a couple weeks ago that just approached us on that. No, I had like 2 good weeks of trade, and then one day I took it all out. Yeah, okay, well, I can tell you what the problem is there.
Yep.
The stops were way too wide.
Right.
Okay.
Target achieved, gang. We're done.
Congrats. Dinner on Josh. And so if there's one thing you guys can take away, there was lots of good things here, but the one thing I'd say, hey guys, is learn how to flip that off. And I saw a note just come in here. What was that? It's not easy. It's mind games, right, Stephen? It's huge mind games. But if you identify, that's part of those 4 questions Josh talked about at the very beginning of this. It's part of those 4 questions. What am I willing to risk? What am I willing to make? Where's my stops? Where's my profit target? How far can this thing go? Right? Just because it's a trade setup doesn't mean you take it. So what really happens here is this. Most people don't have any type of strategy or plan. Okay, they just come in, they go, oh, I think it could go down there. I'm going to jump on board with this. And then next thing you know, they get stuck in the hole on a trade, or they get stuck something on a breakout in a trade, and it rolls against them. And they're like, well, I'm going to wait and see if this comes back. And then it doesn't, and then it doesn't, and then it doesn't.
Yep.
And the next thing you know, you're just taking a beating at that point in time. Well, then frustration sets in. Then comes the, okay, I got to get it back. And then you can see the whole range of emotions that go with it.
Yeah.
And it's tough. I will, yeah, Stephen, you're absolutely, it was everybody's. You're not the only one, man. It was everybody's issue in the beginning, and some of them, that's what runs them out of the business. See, trading really isn't that difficult. Finding trades is not that difficult. Okay, there's really only 3 trades out there in the world, but at the same time, how you manage those trades, how you deal with those trades and losses and wins is really the differential, the tipping point for your P&L to be consistent over a time frame. You're going to have losses, no doubt about it. You got to be okay with that.
Yeah.
You just can't have those 20-point losses when you're taking 2 and 3 point winners.
Yep.
And I hope that makes sense. I want this to be positive for you guys, because I think when I finally sit there and go, and here's how you want to know if you're doing it or not, you track your trades.
Yeah.
Track your entries, your targets, and your stops, and then go look at the R values on these. Okay, R1 is your stop, R2. Okay, so R is your stop, right? It's a risk reward. That's all it is. Mm-hmm. So if I'm risking 1, okay, to make 7, well, that's okay. I can do that all day long. But if you're risking 10 to make 2, and you think, well, if I give myself a wide enough stop, right, it's not going to hit me.
Right.
It's that one time that you do that, they're going to come get your stop.
Yeah.
So anyway, I hope that helps, guys. Just, that's a tough one. Stephen, thanks for admitting it, because it's hard to admit. So that's the part about trading, is looking in the mirror and say, woof, man, I got some things to work on, right?
Yeah. Some real practical tips in this way. Just like JP said, like tracking your trades. So if you're not tracking every trade and taking notes on that, you're going to struggle to be ultimately consistent.
Absolutely.
And I know a number of you. I mean, Cody, I see you on here. I mean, you know that, Robert, you know that. Like, you're not going to be consistent if you're not tracking and notating that. Like we look at trade recs every week from traders in our community, and like we get incredible learnings. Like even one, like, okay, why did I take that trade? Oh, I was fear of missing out, so I was forcing the trade. And then you go look at your trades for a week, and you go, oh my gosh, if I took all the fear of missing out trades out of my trades, I'm a profitable trader. Yeah, so what absolutely. Is that? What's that? That reinforces into the brain that I'm going to wait for the prices that I intended to be active at, and if I don't interact with those prices, I'm not going to take a trade. The big part of this crude trade I just took was because of 2 ideas. One, 58.30. I knew that price last night. Right, the profile gave me that price last night. Was able to look at that for a short target, and then was expecting. Why was that a target? Because I was expecting the auction to hold there, if approached from the upside, and so it's also a reasonable place that it could be used to go long from if it holds. Right, but that price, because this is one of the coolest things about the profile. It's why we have edge on everybody else who doesn't use it. Is we can see that not every price is the same as another price. So some prices are worth being active at, and some are not. Right, and so we expect certain behaviors around that. So tracking those trades, having notes on those, and then like what JP just said about if you find that you're taking profit at 2-3 points, but your risk is like 10. Flipping that, or at least saying, okay, my average, and knowing what your average win is, and then try to make your risk that tight. And yeah. you're gonna feel how upside down it is. And then the other thing that you add to that is to say, once you're in a trade, and I know that this is hard because the brain doesn't want to be wrong. Okay, so when you put a trade on, as soon as it goes and you get that dopamine hit of the trades going in your direction, you want to cover, because you want the payoff of it went in my favor. And JP's absolutely right. Like, the math won't work for you in markets if you're always taking that short win and exposing yourself to, because it just takes one trade to wipe you out if your risk is that big. But once you're in the trade and you've defined that trade, again, this is another place where the profile helps you, because you can define the trade and a target much wider and further away than where your stop is, so that you can say, hey, and you also have reasonable expectation that that could be achieved. So like today, again, if I could get up to 76, 78, I know that's an unfair price for buyers. That could be an opportunity to sell, and I could look back to 91.56. I mean, now, you can see we're rotating back to 91.56 right now.
So
I wouldn't take that trade, because it could run all the way up to 76 and I'd be asymmetric in my risk to reward.
yes,
If I get closer there where I could get tighter, then I'm willing to take that trade, and then I get triggered. The other one is, what's triggering me into the trade? Is it strong behavior? So part of the reason guys stops get run is because they'll just say, oh, I think so, and I get in, and they don't wait for somebody else to be there with them.
yes,
Strong behavior gets defended. Like, stops will be stickier. Now I still get stops run. JP still gets stops run, but we get fewer stops run because we lean into strong behavior. And then once we're into the trade and we've defined it using those 4 questions, then basically what we do is we say, hey, is there any reason for this trade to be invalidated?
yeah. And a lot of times when we get one that goes and goes good is because we let the stops get run and we take advantage of that.
Yeah.
Okay, and that's the benefit of the profile, because you can see that kind of stuff. So one other quick nugget for you is, oh shoot, I just lost my
Oh,
train
do
of thought.
you see Dylan? I want to do Dylan's question here real quick, because he said, especially so when you're first moving from sim to live money, the fear of lost profits is real.
Yeah.
Yes. One real quick thing about uh, simulated trade and live money, because there are different divergent perspectives on this, and uh, there are some who will say you can't do sim trading that's not teaching you trading.
I
Okay,
disagree with that.
I wholeheartedly disagree with that statement. Yes, you do need to move live, and there are different aspects of emotion and cognition that take place once there's real money on the line. But let me ask you this: if you it's been said over and over again that one of the hardest things to do in professional sports is to hit a baseball. The distance between the pitcher's mound and the plate, the speed at which the ball is coming, how small that ball is relative to the bat, it's one of the hardest things. That's why an incredible baseball hitter has what, a 300, they have a
Yeah.
300 batting average.
If you're batting 300, you're going to make millions of
Oh
dollars.
my gosh. Yeah. So it's so hard. So let's say, so if I'm not a consistently profitable trader and I start trading live money, I think that's the same as if you had never been in a batting box and you step up against a major league pitcher. You think you're going to get a hit? No way. Absolutely not. Now, if you went and spent hours hitting off of a pitching machine at 90 to 95 miles an hour, and then you stepped into the batting, I could take an amateur who has never faced a big league pitcher who will have more success. And what reinforces the success is because they've seen it. They've seen it enough that they can understand how the ball is going to rotate. They're going to
Yeah.
understand the tempo it's coming at them. They're going to know where their swing needs to be, right? So, and when they did that in the safety of the pitching machine, they could try all kinds of stuff to figure out what worked for them. And then once they had the confidence that it worked, and then they step into the batter's box, they're ready to go. So as if you're not consistently profitable yet, I think one of the worst things you can do is keep putting real money on the line. Like, have we traders that work with us, we give them 2 trades to look for. You look for these 2 setups every day. Now, I've got 16 setups that I look for. Okay, I'm not going to give you 16. I want you to figure out these 2, because if you can come with these 2 every day to the market with an idea, and you can execute that, and you can run it in back tested replay sim and get that thing down, then you're ready to put that on in live money. I saw, I don't know if you saw JP Otis this week. He's like, hey, I put my first one on live money, and he was so
Nice.
excited about it
Yeah.
because he knew what he was looking for. He knew how to execute it, and even if the trade didn't go in his favor, it didn't ruin him,
Yeah.
because he knew, hey, it's just like flipping a coin. I've got enough positive expectancy. I know the math on this trade. I'll be good. And when I find traders who struggle, especially around the emotions of live money, it's because they didn't have an edge to begin with.
Yeah.
They had an idea of the opportunity without markets, without respect to the risk, and they just haven't done enough process. Guys, I mean,
Yeah.
trading, and here's the last thing I'll say, and I'll shut up. Trading is a hard game, um, mentally, emotionally, physically. It's we've referenced before, but John Coates' book on the hour between the wolf and the dog. The same thing happens in a trader's brain as happens to somebody who's on the front line infantry in military conflict. It's that type of stress. So, I mean, it does all kinds of stuff to you. And we could talk about how do you care for your body and diet. And I mean, you got to have a fine-tuned machine. Um, but
But once you get to that point, and Dylan, that's a great um, you know observation. There is that when you're sim trading, you are practicing your execution on everything. You execute it. Now I'm going to give you one more nugget here. When I talked about risk reward, always ask yourself, why are you getting out of this trade? Is there a reason that says get out of the trade other
yeah,
than your stop?
right.
And that's how the pushing comes with trades. We have a target typically that we want to achieve. We were looking at 33 this morning, right? And it bounced right off 33 this morning. Actually,
Yeah,
30, I think it was the
yeah.
low, right?
First step. Yep.
Yeah, so it bounced right off that. They flipped the machines on and it was off to the races, right? So you could either liquidate there or you could see what order flow was doing, but there had to be a reason for you to say, get out of the trade. If you were in that trade with us, I was in at 67 on the NASDAQ at the break of the 30-minute low. Okay. So I went 67 and I think my final liquid, I have to go look at my numbers. I scaled down on the way down, but my final was 38. All right. So there was a reason for me to get out of those on the way down. I had a valid reason to keep scaling off of those going down at that point. Most people, if you would have taken step break with me at 67 and then took it off at like 62,
Yeah.
oh my gosh, you would have lost how much in profits?
Yeah.
Not only that, the risk reward was ridiculously good, right? So look at not only just the risk reward, but ask yourself, why are you getting out of this trade? Is there a reason? Now, of course, the other question is, why are you in the trade? Right? And these are really the psychological things that you also have to work on. And we talk a lot about that with the guys in the channel, because it is important. It really is the differentiating portion. I mean, listen, the profile is extremely important to us. Okay, it's extremely important because it's a great tool to use to find edge and to identify areas that like Josh just talked about earlier, that could provide opportunity with a good risk reward measure to it. But then now you have to, the challenging part, as we always talk about, and just what Stephen had talked about as well, is you got to get out of your own way now and let it work and think through and process this information, rather than being on, as Josh explained, being on the front line of a war with bullets snapping and cracking over top of your head, and you're just trying not to crap yourself.
Right.
I mean, I'm sorry for the expression, but
Yeah,
that's
yeah,
the
yeah.
truth. Because I mean, for guys who come from sim to live trading, the first thing they notice is their hands start shaking, even if it's
Yep.
a one lot,
Right.
right? You get used to that, right? But keep working at it, guys. It's all part of the process. It takes a little time, but once you get the time down, and once you get this down, you get the repetitions in, and you go to knowing what you don't know to knowing what you know, and you come into that, which Josh talks about, the unconscious competence. It becomes a really glorious, thing. So
Yep. Appreciate your
these are
comment.
great questions.
Yeah,
Yeah,
it is
those are
great.
great questions. Thanks.
Yeah. So, Arno, I see your question on. Yeah, I'll answer that one offline, brother. Yeah, I'll answer that one Slack. Real quick, if for those of you not part of our trading community, want to get a sense of what it looks like, you can start any week and spend a week with us. That's kind of our pledge for free. To spend a week. If you're struggling, you're not where you want to be. Now we'll just give you 1 week. So you spend 1 week, decide not to go with us, and ask for another week. We're not going to because that says something about your willingness to invest in yourself. But get a sense, give us, we can have some one-on-one discussion, see kind of how we approach it. We are active on Twitter and Facebook. We also post on Instagram. we on the gram. But understand that, and trading is hard. It is simple, obviously, even just using the profile, right? Buy at or above value, sell at or below value. Know where value is in the time frame you want to be. That's the simple aspect of it. But execution on that, anticipating, not giving over to that fear of missing out is hard. And if you ever need just some support, want some encouragement, you can always shoot us an email at team@tradewithprofile.com. Give us a call. We do reserve time every week, a portion of time for one-on-one free consults. We're not trying to sell you anything. We're just trying to help you. And if it makes sense that you do some work with us, we can certainly talk about that. But we also want to work with traders that are going to be a fit for our process. And here's the stark reality is that most people who are in markets don't want to do the process. That's why they're not successful. That's
Don't
it.
want to do
Like
the work.
they don't want to do the work. And that's okay. Just don't be upset when it doesn't go your way
Yeah.
because you weren't willing to put the work in. That's all. I mean, it's, so that's it. Hey, everybody, have a fantastic weekend. We will talk to you later. We'll be back next week. Have a great weekend. If you're having an extended holiday, enjoy that with some friends. And
Yes. Enjoy.
thanks for the questions. And we'll post the recording to our website, and we'll let you know, be notified when our next session is. Peace.
Awesome, guys. Take care.